This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and as of yesterday, we finally hit 20k subscribers. So a massive thank you to all of you guys. I have no longer got window capture on. I've got display capture, which means Activate Windows is back. So the OGs know all about that. And speaking of the OGs, if any of you guys are still here, let me know in the comments. And thank you very much for being amongst the first 1,000 subscribers, as well as the people that earn triple OG status on the channel for being amongst the first 500 subscribers. Again, if you're still here, let me know in the comments. So a massive thank you to all of you. Feels kind of strange to have 20,000 subscribers, to be completely honest. Feels incredibly humbling that 20,000 people have hit that subscribe button. And in this niche, in the trading and investing realm for YouTube, it's incredibly difficult to retain subscribers. And the reason being, okay, most people can't manage risk. So if you're here, okay, promise yourself you will continue to be a professional, you will continue to manage risk. If you're unfamiliar with how to manage risk, there's a tutorial in the playlist. But if you look at some of the top crypto channels, for example, you'll notice some of them have hundreds of thousands, a couple of them got over 1 million subs, and they get the kind of same amount of views as a channel with 20 to 100,000 subs. And that's simply because people can't help themselves but get wrecked. So I'll continue to strive to build a community of serious traders and serious investors, people that treat this like a business. But in order to do that, I need you to look after yourself. Remember, you're against yourself in this game, so please continue to manage risk and let's all be around for the long term. Love this from Tony here, okay, going out on a limb and suggesting that Bitcoin will be at 76k within the next 2 weeks. And if anyone's subscribed to his newsletter, then you'll get the explanation as to why. I actually agree with Tony the Bull. And back on the 1st of October, I posted this and said, I wonder if we get an ABC into a mid-cycle low, half-cycle low, and then we would resume up. You can see this would be somewhere akin to 70 plus K within a few weeks. So it's interesting that me and Tony seem to see similar things, albeit from different angles. If I zoom in and take a look here, okay, here's an updated look at the chart. Seems like to me A, B, possible C, and then off we can go if indeed this thing is still going to be in play. I still see a whole heap of people that think that this is about to resolve to the downside very violently, and it's a market, can't rule that out. I think on a balance of probabilities, as I keep saying, we will probably be seeing no more than a touch of support or a quick violation, but this current yellow squiggle remains my base case until invalidated. For the rest of today, I kind of wanted to point at a couple of things because we've been talking about the cycle lows, hunting down these cycle lows, getting some longs on for about the last week and a half. I consistently said by Tuesday or Wednesday, we ought to have found the lows. And of late, I was talking about having a preference towards seeing a 2 drives pattern show up. So if we can get a slight undercut, that would be Bitcoin's 2 drives. I'm going to hop into the charts in a minute and we'll focus on finding the rest of the 2 drives. Before we do, I just wanted to take a quick detour about altcoins because I see a lot of people that talk about altcoins. A lot of people ask me to cover them, but it has been my base case that there will not be a broad-based alt season this time around. And this kind of summarizes why I think that. A lot of the reason I think that is because I think Bitcoin is going to top sooner and have an extended bear market. But all of this in here, as I was reading it, I was thinking this is spot on, right? This is where we are. And newer investors, particularly people that are crypto only, they just don't have the experience or the knowledge to draw on to be able to see this for what it is. But let me share this with you, okay? It's kind of crazy to see the progression of altcoins from 2017 until now. Back in 2017, we had ICOs with white papers. They were promising amazing partnerships and a roadmap, but ultimately those roadmaps were never delivered in 99% of cases, probably more than 99%. Communities were forged, and there are still people to this day with a 2017 alt in their bio repping for a coin that does nothing and has underperformed almost everything. In 2020, we saw DeFi and other tech. Some had actual functionality, but even for the successful protocols, the coins still eventually traded down 90+%, and many will never actually revisit their previous all-time highs. And you could argue that most NFTs were just altcoins with pictures outside of a few cult communities. Most are zeros. And so that's what we've had before. What have we got this time around? Okay, this cycle is just straight up meme coins. We all know the coins do nothing, right? We all know that they have no value. They don't do anything. They're not even trying to pretend like they are. They just straight up come out and say, this coin does nothing. It's a meme. But seemingly this time around, that doesn't matter, okay? The community and attention drive the price, pure supply and demand. If people want them, they get bid up. And it's been a really funny observation that all the utility coins, all the ones that have roadmaps, all the VC-backed ones, the market has kind of matured away from those and said, oh, we don't care about those for the most part. And instead, we just want to bid Pepe or Popcat. Because the market has kind of worked out that it doesn't care. It doesn't care about the technology. No one even believes in these things. Instead, we just want the pump, right? People just want to catch a pump so they can get more fiat or use that pump to acquire more Bitcoin. So all of this kind of reminded me of the evolution of the dot-com bubble. I've studied these prior bubbles extensively, and when I saw all of this going on, I was just like, yeah, I've seen this before, right? This is what happens in the dot-com era. And for me, pets.com was one of the biggest parallels, right? Pets.com, you couldn't buy a bag of dog food at pets.com, and it went into this huge parabolic blow off top because people didn't care, right? That was the meme coin right at the end of the cycle. They didn't care that it didn't have a pet shop. They didn't care it was pets.com that you couldn't buy a single item of dog food from. That didn't matter. What mattered is the thing going to pump? Because that's how the final cycle behavior plays out, okay? Humans, they make the same mistakes over and over again. Greed, all of that kind of stuff just repeats on a cycle. And this is seemingly exactly where we are this time around. This is one of the biggest reasons I thought that we're not going to see a broad-based alt season, simply because I think most people are holding pets.com, hoping for a moonshot. I also think the market has wised up to the VCs. A lot of people don't trust VC coins anymore because they know they're just pump and dumps to make a select handful of people rich. And it does beg the question, right? Is it better to be lied to about some revolutionary VC-backed coin that will never actually deliver on its promise, never even intends to deliver on its promise, just wants to have a massive pump and dump and use a bunch of rookie investors as exit liquidity for the VCs? Or is it better to have a coin, like a meme coin, for example, that everybody knows has no utility? It's not promising anything. It doesn't have a roadmap. We're just playing the attention game. Do you want to bid up PopCat? Based solely on the fact that we all think other people are going to bid up PopCat. I mean, that's pretty much where we are. And Ben summarizes this really, really well here. Okay, meme coins are just the new sports betting alternative, just an advancement of gambling with higher dopamine hits and speculation. People's bank accounts have been destroyed by inflation, high interest rates, and increasingly higher and higher unemployment rates. And now they're just desperate to make money. They don't care about risking it all because they haven't got anything to begin with. Newbies are coming into the market and just going straight for the maximum risk portfolio. Again, they don't really care about VC coins. They don't really care about roadmaps, underlying value, any of that. They just want to bid PopCat because they haven't got much to lose and they've got everything to gain, right? They're essentially buying into lottery tickets. And again, as Ben points out here, this is multi-decade equity cycle top behavior. This is pets.com. This is, I'm going to bid up pets.com even though I can't buy a dog bone from the pet shop, right? I mean, that's what we're doing here, and that's okay, right? I'm not saying that we shouldn't be doing this. It's not for me personally. As you know, I'm not into altcoins, but I wasn't into pets.com either. Now, you could say, well, that makes you a bad trader because I'm missing out on huge gains, right? And you would think, as somebody that is capable of trading, then this would be really attractive to me, but it just isn't. I can't explain it why. It's just not in my character. It's not in my nature. I have no real desire to bid PopCat, but I am the sort of person that likes to look at these multi-decade equity cycles. As you know, if you've been following me for any length of time at all, I think we're getting close to seeing some tops in terms of time. And I think when we go back in hindsight, all of this will be pretty obvious. We'll be looking at what was getting bid up, what was going to the moon, what was pumping, and we'll be able to say, yeah, you know what? There was too much froth in this system. People were losing their minds and just pumping all kinds of craziness. And eventually, bubbles like that do have to deflate. Right now, we've got this perfect cocktail for maximum risk allocation and speculation because, like I said, people don't have any money. They're buying lottery tickets. They've got nothing to lose, right? They can afford to lose 100 quid if the upside potential is that they could make thousands or even hundreds of thousands or even more than that, right? So it's absolutely a wild time to be alive. I completely agree with Bob Lucas and Ben here that this is kind of end of multi-decade cycle type behavior. This is the final hoedown. And I really think if I'm right and we get some kind of early top for Bitcoin, if I'm right and most of the altcoins don't take part and we just have the memes blasting off and maybe a handful of, say, the top 100 caps or something, maybe a handful of those do a 10x or more. I think largely speaking, we're going to be able to look back at this and say, this makes perfect sense, right? This is pets.com all over. And particularly if Bitcoin is going to have a slightly earlier top and an extended bear market, then most of these altcoins are going to go to zero and probably never come back. Just like what we saw with a bunch of those companies where you were buying a domain in 2000, right? Same deal, okay? Humans never change. They never learn. Emotions repeat on cycles, and that's why cycles exist and are observable everywhere that we look. So, wild times to be alive. And speaking of the end of these long-term cycles, Andrew shared this with me. Are we in the middle of finding a shakeout before one final pop to a fresh set of all-time highs before then we have a meltdown? It's entirely possible in my humble opinion, and as much as I really, really, really want to invalidate this 2007 fractal, I've been talking about this all the time, right? This is super, super similar. The dates at the top were just a few days apart. The dates at the bottom were a few days apart. We had the same backdrop with the same interest rate on the FOMC on the same date, the 18th. They also did the same 50 basis points cut in both scenarios. We had the same structure. We had the VIX also spike on this kind of yen carry trade unwind, same as it spiked back in 2007. We then went on to run up to a day 39 high in both cases. Okay, eerily similar. I really, really, really want to invalidate this, believe me. What I want to see is this be 1, 2 drives, cycle low, and here's the key part, a new all-time high. As soon as we get that, I will happily make a video and say, here we go, guys, scratching this one off, blow off top, let's get it, okay? But as it stands right now, unfortunately, as you can see, we are incredibly similar to this. And if we put in a cycle low sometime around Thursday, that will be day 46, exactly the same as back in 2007. And then the question will be, do we get a lower high bounce that starts to roll over? Because if we do, then this actually becomes the base case. And again, I really, really don't want that to be the case. What I would much prefer is we get some kind of 2 drives in the making right now, then a final pop into the end of the year. That's what I want. That would give us our 3rd angles, right? That would be lovely. But as ever, I'm not the kind of trader that is going to just be stuck on one idea. Until such time as we do find a swing and a new all-time high, then I have to leave this on the table. Again, I don't want to, okay? Believe me, I don't want to be sat here talking about 2007 repeats or anything like that. But unfortunately, as you can see, okay, we cannot shake this fractal just yet. So leaving this here, going to focus entirely on the cycles for the rest of the video. What have we got? Okay, I've been talking about my preferred look being 2 drives in here. So a swing any day now, for me, is a buy and add situation. It will look something like this. We'll move the stop up from the first position, and we will look to maintain this 3rd blow off top angle. When we zoom out, it'll have all the familiar symptoms of a 3rd and final blow off top angle. And hopefully we can get a top sometime between November and December to sell all of the equity positions and flip to be in net short. Assuming that we are not already topped, okay, and looking for some kind of major market meltdown similar to 2007, if we assume this is not going to play out, then we should be looking for a swing any day now. Today, tomorrow would be the low, followed by a green candle the following day. So I remain cautiously optimistic here. This looks like it is fairly close to bottoming, but we do have to keep an eye on this scenario, as I've said a million times. Same deal for the NASDAQ, right? As I was saying, my preferred look is 2 drives. Hopefully we're about to get that. I did say, as of yesterday, I was ready and on guard in case it ripped higher, but my preferred look would be that it was 2 drives. That seems to be what we've got at the moment, so I like what I'm seeing here. I'm going to readjust this to here. Actually, we'll do that on the S&P as well. There we go. So we're ready to catch 2 drives with a trend line break if we can get it. Hopefully we get an undercut. That makes it way easier to deal with. But a double bottom here or a slightly higher low followed by a breakout could also be me calling lows. And same deal for the Dow Jones, right? We've readjusted the trend line up and we have so far got the making of 2 drives. Just need a little undercut and a breakout. And again, we'll be adding there. So wholly speaking for the stock market, 2 drives was what I wanted. 2 drives is apparently what we're getting now. So unless we get some kind of black swan, huge meltdown, okay, then happy days, should be able to get some longs on. And if you're a level 3 member, of course, I'll notify you in real time as and when we set up with the exact levels and the stop loss and all of that good stuff. For the precious metal markets, again, similarly to the stock market, I was saying could be, and I'm on guard in case this happens, but I would prefer to see a 2 drives to an undercut at that low. That looks like we're going to get it probably today or tomorrow, similarly to the stock market. So again, happy days there, right? The preferred look was 2 drives. Looks like we're going to get 2 drives, and then we've got a short-term trade. And I say short-term because I'm kind of expecting this thing to top no later than day 9, and we're probably going to waste 2 or 3 candles finding the swing. So again, happy days there, right? We wanted 2 drives. Seems like we've got 2 drives. And Bitcoin, we kind of already did, right? Looks like we've had at least 1. Probably going to get 2. Something to look out for here, if you're bearish, if you're hunting for lower numbers, is if we do not get an undercut at that low, okay, if this forms a double bottom, something like this, right, or even a higher low above that low from back here, then if you're a bear, I'd be really intimidated by that, okay? An undercut is pretty bullish, but subtle tells from the market are really important, and if we form a double bottom or a higher low here, then that shows this is even more bullish than most people realize. So something to keep an eye on. In fact, if you're bearish, you really, really, really want to see not even a marginal lower low here. You want to see this thing come all the way down to the red or even pierce the red trend line. So anyway, keep open to all of that. Like I said a million times, I think this is probably going to do something akin to the yellow squiggle. And then I think we're going to be blasting off to all-time highs. We are running out of time to see a left translated cycle. So we are probably going to get either a mid or a slightly right translated cycle, but ultimately, remember, it doesn't really matter. What matters is if the cycle is going to top any time before, let's say, March, and I think it will top before that for sure, but any time before March implies that instead of 12 months, we're going to have in excess of 18 months of bear market. So that's the main thing, because your average market participant will not be ready for that. For now, though, let's not get too far ahead of ourselves. Let's see if we can get a push, or see if we can get a new higher high above this high, okay? Because that would be omega bullish as well. And I'm jumping around a little bit here, but remember I was talking about the VIX popping up, okay, as the cycle lows are forced for the stock market, and then we should see this thing get crushed to a new low below all of these lows, and that's where we should be able to get some kind of hedge on for the VIX. As ever, we'll keep taking it one day at a time, right? 2 drives seems to be showing up for the stocks, for gold, and possibly even for Bitcoin, so happy days there. We'll get onto some positions in the next couple of days as soon as we found a swing, and we will see what the market can give. Until next time, I'm your boy Camel. Take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a